Hi, and welcome to our end of November update from the Wealthy Doctor Institute, physicians leading physicians through finance. We work with physicians and other busy professionals who are not happy with the current investing strategy. We help them get this part of their lives handled so they feel empowered and in control. I'm David Ye, and in my book, Busy Doctor's Investment Guide, I show you just a few ways where just a few adjustments each year can help build and protect wealth. Although the strategies in this book are easy to calculate each month, for those of you who are new to this concept of this book, or for those of you who are new to investing in general, this video will try to clarify what I do every month. Feel free to follow along every month until you get the hang of it. So this month, we will be reviewing the 20-month moving average system, reviewing the sector server version of the MRI system that I covered in my book, remind ourselves for the rules for the 25% stop loss system, monitor the free sector server strategy that comes with any sector server subscription. So a lot to go over, so let's get started. So reviewing our systems, we'll start with the 20-month simple moving average system, otherwise abbreviated to the SMA system. With this system, we have basically one rule. All you have is a 20-month moving average. If the S&P 500 index mutual fund is above the 20-month moving average, then it's relatively safe to stay invested in the index fund, the S&P 500 index fund, otherwise get out. Remember, the 20-month moving average is our safety belt. It only works if we watch it once a month. Not more often, not less often. So here's a graphical representation of what's been going on. So we have the blue line, the jagged blue line, which is the S&P 500 index mutual fund dividend corrected. And then you have the red line, which is the 20-month moving average. Now, if you remember from last month, October, we took a tumble. But November, it's been very choppy, up and down. However, it managed to eke up just a little bit. So now, the VFI index, which is the Vanguard version of the S&P 500 index mutual fund, is now up to 255.74. Meanwhile, the 20-month moving average has eked up slightly to 241.47. So remember, last month we said that we were okay if the markets went up, went sideways, or even went down up to 4%. And in the middle of the month, it did indeed cross below. But again, we only look at this once a month. So if we look at this once a month, we're now 5.9% above that cushion. So we have another month to see whether or not we're relatively safe or dangerous to be in the markets. And right now, according to this system, we're relatively safe to stay in the stock market. Now, in contraindication, we have sector servers version of the bull bear filter called StormGuard Armor. And according to StormGuard Armor, we're still dangerous in the dangerous zone. So, for instance, if you take a look at the white line, or the red line here, that's the S&P 500 index, and we've been in bonds since last month. And we're stayed in bonds, and as a result, we're slightly ahead of stocks by being in bonds. Now, it doesn't always happen this way, but statistically, this type of filter keeps us relatively safe over the long run. And so here is the graphical representation of the actual StormGuard Armor indicator. It's still clearly in the negative zone, which is the bear market zone, which means we stay out of stocks for now. So some observations for this month. The S&P 500 index has been extremely choppy up and down. However, it's managed to edge up just slightly for this month. Now, I've gotten some questions about the so-called Santa Claus rally and the Thanksgiving rally. And yes, statistically, in the week right before Thanksgiving and right before Christmas, markets tend to go up. That didn't happen this year. In fact, this year, the week right before Thanksgiving, the markets crashed. But then the week after, it went up. Go figure. Another question I get is, does that mean something's up with the market because it's acting so strange compared to what we're used to? And as traders, we know that this really doesn't mean a thing. The markets just do what the markets do. When the markets trend one way or the other, it tends to make characteristic patterns. And so far, according to the simple moving average system, It has not yet met criteria for dangerous stock market yet. However, the StormGuard armor has triggered danger territory. So remember, if you're using one or the other, follow that system. Don't try combined systems. Just because one says one thing and the other system says another thing doesn't mean you throw up your hands and go, oh, I don't know what to do. No, you're following just one or the other. You're not following both. So don't combine systems, follow one or the other. I'm just illustrating both just for review. And remember, neither one of these systems is designed to catch peaks. Markets must fall enough in a characteristic way for either one of these systems to fulfill criteria that yes, it's dangerous in the markets right now. In other words, neither one of these systems is foolproof. However, if we're able to catch a major multi-month to multi-year bear market within the first 2 or 3 months, that's early enough to make a difference. Now we're going on to the next system, the monthly rotation investment system, abbreviated to MRI. Now remember, I am no longer following the system I outlined in my book. And that's because with Sector Surfer, the way that the Sector Surfer algorithm works, it is more sophisticated than my pen and paper system that I outlined in my book. But again, use the same 3 sector mutual funds, the S&P 500 Index Mutual Fund, the Emerging Markets Mutual Fund, and the Inverse S&P 500 Index Mutual Fund. By definition, one of these is always going up. Just a matter of catching which one has the strongest uptrend. Now remember, since the Sector Surfer version of the MRI already has an inverse mutual fund, you do not need a StormGuard filter with this particular system. So here's the Sector Surfer version of the MRI funds for this month. Yes, again, you see this choppy white line up and down and up. Same with the emerging markets, up and down and up. The emerging markets actually deliver better than the US large cap funds, but that's okay. That's only 1 month so far. There has been no criteria to switch to the emerging markets yet. Remember, last month, both of these were crushed by the inverse fund because when the markets crash, the inverse fund goes up. So until Sector Surfer triggers a trade signal on this one, we're holding the S&P 500 Index Mutual Fund for now. So observations for this month: the S&P 500 Index and the emerging markets indexes were choppy, but both managed to gain a little. And they both happened to gain week after Thanksgiving, which in the grand scheme of things probably has very weak predictive value of what's going on in markets, rather than trying to predict using our gut feelings. Let's use algorithms so that we're not sabotaged by our own emotions such as fear and greed. And then the rotation algorithm has not yet triggered a switch. So next system is the 25% trailing stop loss system. This system is when you absolutely positively have to buy this particular stock for some strange reason. Now remember, I frown on owning individual stocks in general, aside from the normal market risks that mutual funds have. Individual stocks have idiosyncratic risk. In other words, if you have stock-specific news that comes out overnight, then the stock could gap down and crash without us being able to do anything about it. So, if you're still willing to take that risk and buy a particular stock, keep in mind, limit your losses to 1% of your total portfolio or trading account. And you do this by using up to 4% of your trading account to buy that one stock. And then you immediately put a 25% trailing stop loss order. This way, if it drops 25%, you're out, and you've only lost 1% of your total portfolio. On the other hand, if the stock goes up 33%, you can go ahead and buy another block of stocks using another 4% of your account. And remember, now that you have more shares in your account, update a trailing stop loss order to reflect the increased number of shares, and rinse and repeat until you're finally stopped out. So the next system is your own Sector Surfer system. Now remember, I don't know what you're using Sector Surfer for. Anyone can choose any combination of stocks, bonds, ETFs, mutual funds, anything with a ticker with their Sector Surfer system. So I can't tell you what to do with your sector surfer system. Your sector surfer system will notify you when there's a trade. And depending how you set it up, it will either text you or email you or both. Now remember, sector surfer is an improvement on classical pie chart investing if you structure correctly. Sector surfer has two main tools. It has Storm Guard Armor, which is like my 20-month moving average that I explained to you, only more sophisticated. Trades a little bit more often, but does a better job of avoiding more of the market losses. And remember, all we really need to do is avoid the big multi-month and multi-year market losses to make a huge difference in our results. And then the second component has sector rotation, which, like my MRI, rotates and optimizes which one of your choices has the best momentum at any one time. So we can use sector surfer to optimize both the bull market and bear market components of the markets. Remember, when you're making your sector surfer strategies, there are a few nuances. Like, for instance, don't use both stocks and bond funds in the bull market strategy. Separate out stocks from non-stock funds, etc. So you will get signals through email or text, or if you like me, log in at least once a week just to make sure that you didn't somehow miss a trade signal. So here's a free sector surfer strategy that comes with your subscription. It's free, it's not that great, but at least if it's good enough for you, you don't have to pay anything to use sector surfer. And this month, we've been in bonds, so that's why the yellow line, which is us, has been relatively flat. You can see how with the particular range of stock funds, some do worse, some do better when the markets are choppy. In other words, going up and down violently. But overall, sector surfer Storm Guard detected relative dangers in the stock markets for now. So in summary, this video we reviewed our systems, including reviewing the 20-month moving average system, the monthly rotation investment system, at least a sector surfer version, dealing with stock tips, and then reviewing the sample-free sector surfer strategy. Remember, last month there were trade alerts. If you did not place your trades last month, kind of hard to say what to do this month so far, because now we're dealing with old signals. And so that means if you received a trade alert last month, you probably received an alert to just wait this month if you haven't acted on last month's trade alert. So I know I follow up with several of you in person every month. Some of you get this, but some of you could use some help, whether or not you admit it. Now, what I'm doing here is not rocket science. It's something that is definitely learnable. However, are you happy with your current investment situation? If you found value in these videos, feel free to schedule an investment wellness checkup with me. It's just you and me, one-on-one, for around an hour. Together, we'll create a sense of clarity about the financial future you really want, why you're investing to begin with, and then from there determine the essential investing building blocks and tools for your particular situation. Now, for some of you, you know what you need to do, but it helps to figure out what has stopped you from having the investment results you want. Then we'll identify actions you can take that may move you towards your financial goals that you desire. Finally, we'll complete the consultation with the excitement of knowing exactly what to do next to create the financial future you really want. Think CME, only it's financial. And think wellness checkup, because if you have a blind spot or financial cancer that you don't know about, wouldn't you rather know sooner rather than later before it grows and metastasizes? Just like how I try to make investment concepts simple, I also try to make scheduling with me simple. You just go to my scheduling app, calldavida.com, and just find a time slot that works best for you. I know several of you wait month after month after month without taking action. If you haven't taken action with your investments yet, at least schedule a call for a smaller first step. And as always, invest safely.